I call the honourable member Michael Woodhouse.
Thank you, Mr Speaker. Like one or two of the members of this House, I spent a small portion of my pre-parliamentary career in banking. In fact, I joined a trading bank, as they were then known, after leaving school, and spent about 5 years in reasonably low-level roles, but ending up at the end of that in the role of
He makes very good tea.
retail. Well, I did actually. I started as the banking junior, stamping the cheques, folding the bank statements, and making tea for the manager of the branch. So it is. That's right, from those humble beginnings. But I actually ended up in the role of retail lending in the Lower Hutt branch of the National Bank in the 1980s, lending mostly to SMEs and mortgages for homeowners. And the interest rates, as members may recall, in a period of about 86, 87, got up to 20.5%. So it was pretty important to get the lending decisions right, and I was trained in what would be described now as the sort of the old school financial disciplines, which I recall as the canons of lending, and the acronyms are various, but we referred to them as the 5 C's: cause, cost, collateral, character and capacity. What do they want the loan for? How much was it going to cost? How much are they putting in? Were they good people to lend for, and what was their capacity to repay? And if the applicant fell outside some fairly tight financial constraints, then the lending application would have to be referred to head office. How times have changed. And they've changed in a couple of ways. Firstly, the approach of lenders has moved away from that cautious approach to very much a sort of a sales approach, with reports now of bank staff being awarded bonuses for the number of and the quantum of the lending that they do. And that's in marked contrast to the old banking joke of were it not for the fact that you needed the loan quite so badly, we might be able to give it to you. And I think the second change is in the complexity of some of the lending products that are offered. And they're not the sort of the straightforward lending to borrowers for bricks and mortar subject to a mortgage. And we've seen a lot of speculative products on developments still on the drawing board being purchased, often by naive investors, in anticipation of a rental income or a capital gain. A capital gain, I might add, that under the current tax framework would be taxable, something that came as a bit of a surprise to investors in Central Otago when the Inland Revenue descended on that area and started issuing assessments. And I mention all of that because although this bill is called the Non-Bank Deposit Takers Bill, it's really not about the taking of deposits at all, but what then happens to them in the on-lending. And we are replete, and many members have already spoken about the many... Sorry? Very good. Well, that never stopped the member over there from carrying on his speech, however unconvincing or convincing he might have been. But there are many tragic examples of... It is. It's withering. It's withering tonight. Absolutely. A cutting whip. Never been called inept, I have to say. Certainly not in this place. But the member can wear it like a badge of honour, I'm sure. But I want to thank you for the vote of confidence with Nostradamus-like prediction. But it is a serious issue, isn't it? Because there are a lot of people very badly burned, and Mr Nash talked about more than $8 billion of deposits lost by people whom I do consider to be naive investors. And while Ms Dalziel talks about what she believes is the lack of a regulatory framework, I'm not quite sure I agree with that, because there have been very sound regulatory frameworks in place. But it has to be said there's a lot of kind of human nature in this equation. And I was advised by a financial advisor that the majority actually of investments into finance companies that failed were not through financial advisors, but by people clipping the coupons out of newspapers and posting away their cheques. And so while we put in place all of these frameworks to regulate financial advisors, all very appropriate response to the situation in which we find ourselves in, The lack of financial knowledge and financial literacy in this country, I think, is very, very low and needs to be improved. So I really strongly support the bill. I look forward to people submitting on this in the Finance Select Committee, but I do think we need to improve our general literacy and our risk approach to borrowing and lending. And I support the bill. That'll be for the next one.
Mr. Speaker.